Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Hope everyone is doing well. All right, so we are wrapping up a week where the world was supposed to end. It was clearly greatly exaggerated, but we're not out of the woods yet. So let's take a look at the broader averages as we take a peek at what's going on today. This is the Dow here, daily time frame. We're taking a look at what's going on with the sell-off, as you can see. Now, this was not only the yen strength, Bank of Japan rate hike, but this was also a lot of that non-farm payroll miss. And we can see the choppiness that we've had here. By the way, one thing that we've really shored up this week in terms of the way in which the overall news that's been affecting the market price action is we're not seeing that bad news is bullish. For a long, long time, as we were anticipating the Federal Reserve would get to cutting those rates, the idea was the worst the data was around inflation, the worst the data was around especially jobs, that we would see the Fed fund futures price in the rate cut. And that's just not what we've seen. So ultimately, the overall expectation now is going forward, we need good data because we are fully anticipating a rate cut from the Federal Reserve on September 18. And I'm sure when the Jackson Hole Symposium kicks off on the 22nd, we'll start to get a lot more detail, reiteration of those expectations being priced in. But this is still a pretty heavy marketplace in terms of the sell-off. What we have done is begun to stabilize. Now, the next part of this is where have we stabilized? And I talk a lot about that daily anchored VWAP. And the daily anchored VWAP, the value of that is not just a price level. This isn't just a price-based support or resistance level. It's a volume-based price level. And while we're capable of piercing it, even closing slightly below it, the battle is going to occur right around there. So I'm not immediately bullish above it. I'm not immediately bearish below it, but that's where the battle will occur. And as we end the week, if we can stay above, say, 52.25 on the S&P, if we can stay above, you can see right here, this blue line at approximately 39,100, 39,080 on the YM. Those would be good steps to, again, giving traders in the next week a little bit more confidence about looking to the long side. The NASDAQ is probably still the most vulnerable. It's spent the most time below that anchored VWAP. And you can see here, we haven't really convincingly broke it. So we want to see candles establish themselves above or below to have a better idea of just the general sentiment around whether or not traders want to be long tech, consumer discretionary, communication, semiconductors. So definitely a lot more vulnerability in the NASDAQ. And then here you have the Russell, again, looking a little bit more like the Dow, the S&P, and that's where we sit as we wrap up the week. Now, again, we'll see where we are at the end of today. The end of the week will have a lot to say about whether or not traders are willing to take long positions into the weekend or not, or whether they want to unwind a lot of the rally and say, you know what, we'll go into next week a little bit more flat. So we will see. All right, the oddest action I will say that I've seen this week is bonds. I like the idea of being long bonds, but they've been so unpredictable. Yesterday we had the bond auction at 1:01 p.m. Eastern. And again, a lot of odd action. I say odd because if the equity markets are rallying and expectations are for rate cuts, bond yields should be lower, which is to say, and I know it's directionally backwards, but if bond yields are lower, then TLT should be higher, ZB should be higher. And we're just now seeing a little bit of recovery from the daily price movement range into today. But I'm pretty content leaving bonds alone, especially since the clarity in gold has been a little bit more in line with what's happening with inflation. And this is where GDX and gold and a position that we have in the sector sequence mastery, Newmont Mining, continue to be where I want to focus. I would love to be in bonds, but I don't mind to wait, right? Wait for the pitch, and not just wait for the pitch, wait for the pitch in the spot where we know we're higher there's a higher probability around the follow through that we're looking for. That's where gold probably edges out bonds, and Newmont Mining is the number one weighted stock in the gold miners. All right, so let's see. As far as the Nasdaq, Dugan, my take on NQ is no different than my take on MNQ. So if we're taking a look at the Nasdaq, I'll always start with the futures contract, and we've been talking a lot about the futures contract, whether that's ES, NQ, YM, RTY, then mapping to really two other things mostly. One is the micro, like you mentioned there, and two is the ETF alternative. So if you look at NQ, think of all the different ways you could trade this. There's MNQ, like you mentioned. There's QQQ, the ETF, and there's, of course, the NQ itself, if you're comfortable with the risk associated with the dollar per point value of a highly leveraged NASDAQ product. How do we trade the NASDAQ 100? And there's also NDX. So there's a lot of different versions. But remember, the best way to trade any of those versions is to look at the mini NASDAQ, MNQ, NQ, for MNQ, for QQQ, for NDX, etc., because this trades nearly 24 hours a day. It's open 23 hours a day, opens on Sunday, and it's giving us that much more complete global perspective of what traders and investors around the world think about what's going on with the NAS. So as far as the trend goes on the NQ, it's the 5-minute chart here on the left. It's in a downtrend right now. In fact, NASDAQ's in a downtrend to start off the morning. S&P's in a downtrend to start off the morning, as is the Dow. So all I have right now is a bearish pre-market. That doesn't mean that we'll necessarily be getting short. It just means bearish pre-market. Right now, if you were trading this now, which you certainly could, right? This is the only gap in the time that's this particular symbols available to trade is between 5 and 6 p.m. Eastern. Other than that, it's moving and grooving. So if you take a look at what's been happening throughout the day, slight uptrend between about 4:30 and just after 5, turned into a downtrend right around 7 to about 7:20, and then you're just looking to short the rips in that. But that's what we have right now. It's in an overall downtrend. All right. So then the next question is, thanks for the question, Dugan. So do I think GDX will have good earnings? GDX is a ETF. I don't particularly concern myself with good GDX will have good earnings. It's an ETF, my friends. So there's not that earnings. So NEM was the main earnings name for GDX, right? So when you look at the ETF as opposed to the sector ETF as opposed to the stocks weighted within it, you're always looking at the earnings of the stocks that are within it. All right. Next up is, let's take a look here. Good morning. Yeah, happy Friday. Thank you, Nomo FOMO, from our Essentials room. All right. Let's go ahead and take a look at, I want to take a look at staples and utilities with everybody while we're here. Because staples and utilities continue to be in a time where the broader averages are pretty darn heavy and there's still a lot of confusion. And I kind of liken and I live in Florida, so believe me, I sympathize with those folks dealing with that Hurricane Debbie, what is it, a depression, tropical storm, whatever it is, it's a mess. Whenever there's bad weather, the Weather Channel will milk it, right? They will milk it, right? Because they know people will watch while there's some natural disaster unfolding. Well, financial media is not that much different, and they got their natural disaster by way of the carry trade unwind, and they will milk it for as long as they can because they know it assures a certain amount of viewership. So as long as the fear mongering is still working, let's work the other side of that, which is staples and utilities. And these continue to be, along with XLRE and actually XLC, because of the strength in telecommunications, these continue to be rather supported. They're not punching up to the higher highs that we saw even 4 or 5 sessions ago, but being able to buy support and ride it up to resistance, and just even if it's working that smaller range, is still absolutely working. All right. So keep an eye on staples, XLU, utilities and XLRE real estate. And then be choosy, but there is some strength in the IYZ by way of things like telephone. All right. Let's see, PLTR calls, Alan, and as far as PLTR, had good earnings. Yeah, here's the daily chart of PLTR. I mean, it's not really going anywhere new, is it? As far as the reaction, I mean, we're still stuck in the same range we've been stuck in for quite some time. So since about the lows in May and the highs in July, we're still stuck in that $10 range. So I mean, it's chopping around in the range. So do they look good? I mean, yeah, I mean, we basically hit the earnings. Look, earnings is going to the going to the convenience store, grabbing a scratch off lottery ticket. You scratched off all that gray stuff, and then, oh, okay, it's a winner. Yeah, be careful with that because it's still a very choppy market. But earnings certainly did give it a boost. And interestingly enough, gave it a boost off these white dots, which is what we endearingly call the equator. But yeah, if you've got them already, yeah, you're absolutely right, Alan. Need to break that $30 level. Absolutely, I'm with you. So in order to really say, hey, we're somewhere new, we're somewhere that we're able to go that we weren't able to go, I agree. Yeah, spot on. So yeah, I hope you're in it. If you got a good trade out of that earnings play, awesome. Let's take a look at it through the volume. Let's take a look at it through the volume. So let's pull in this year's volume on PLTR. And what we want to do is say, hey, where are those volume levels? Not much. The biggest volume level for the year is right at that 200, which is kind of interesting. So yeah, in terms of, oh, here we go. That was the wrong. There we go. The most, that looked very anemic. Okay, so your two biggest volume levels this year are at the 200. Oh, and take a look. We crossed through 2370, and that level was the point of control for the year. So that's at least a really good step, to your point. Yeah, that's a really, really good step, getting above the most volume that we've seen of the year. But you're absolutely correct. We need to see that break on 30. I don't have any skin in this game. I'd rather focus on trends. But that said, really nice move for those of you that have been long. All right, how about XLE for a swing trade? I would not, right now, the only thing that I would focus on within the XLE is Exxon. And crude oil, let's start at the top of the food chain. So if I'm looking at crude oil and it's still below the equator, it's still pretty darn heavy. It's in a downtrend. So if there's a swing in XLE, I would try to find a weak stock or XLE itself, but preferably something in a downtrend within XLE, OIH, or XOP. Find a downtrending stock, short the rip. But if you are looking for a long position, the only one that really makes sense across all three of those ETFs is Exxon. But I'm not super interested in energy right now until crude oil starts to show some signs of life again. Yeah, I mean, remember, this was above 85 not all that long ago. So yeah, I definitely keep an eye on it, Ren. I definitely keep an eye on it. Crude oil, start with crude oil, then migrate over to XLE, OIH, XOP, find either downtrends or the uptrends. And this is how I would do it. Occidental is in a downtrend. Chevron is in a downtrend. So if you're asking, Rog, what's the best stock to short, right? Based on the trend that it's in. Not based on any kind of predictive power. Nobody has those. But based on the structure. Chevron and Exxon would be the best shorts. And Chevron and Occidental would be the best long puts or shorts, while Exxon would be the most bullish. And then if we go on over to XOP, and this group can change up a little bit, but it's usually the same names. If you want to be a bear, XOP is a great place to look. It does not benefit from crude diving back below 80. And here's your oil services and your best bet for follow through to the downside. Not a lot, although Schlumberger and Halliburton are very heavy. And then WHD, go figure. It's on its own journey, kind of like Exxon. So it depends on which way you want to trade what's happening in oil. But obviously, the long positions have to work so much harder to overcome the weakness in the sectors and overcome the weakness in the commodity itself. All right. What are my thoughts on SOFI after earnings? None. None, my friend. I usually don't play names like this, but here's what I would say. If I look at SOFI, what I want to do is remember that anything under $10 is a volume game. You need to find where the volume is. So probably your most important level right now is going to be about $6.50, followed by about $7.39. That's your volume ledge. That's your point of control. We've got a pretty reasonable range between 620 and about $8. So you're stuck in that range for now, but you're in the bearish hemisphere. So nothing here that's really wowing me. But if you're looking to build a long position, you say, Ron, it's a $6 stock. How much lower could it go? I mean, zero is obviously something we want to keep in mind. Not that I'm saying it's going to zero, but it is so close to support by way of just being such a cheap name. So if you're looking at a zone of support for a long position, again, I have no intention of doing this, but I'll throw the levels out there. I would build that position somewhere between 620 and 640, and then see if it can't revisit 8. And then if it can take out, say, 820, you've got a good shot at good chance at, say, 940, and it would just climb the stairs from there. But keep an eye on those volume levels. All right. Let's see what else we have here. ITB. Yeah, I do like ITB names, John. Anytime we have expectation for lower rates, we're going to see the home construction, home builders in an uptrend. So when you take a look at the names within it, ITB itself, not so much, but DHI, Lennar, Sherwin, Lowe's, Masco, I'd say would be very, very good for that. I would leave financials alone. Thanks for the question, John. Yeah. As far as financials go, here we go. I would leave financials alone. It's been a dumpster fire. And look, as long as the Dow is heavy, most of these are going to be pretty darn heavy. Berkshire Hathaway is doing pretty darn well. Chubb is doing pretty darn well. But I'm leaving financials alone. Yeah, I'm leaving financials alone. All right. Next up is TDD. Okay. Steffa is asking about TDD. You know, it's been climbing the Darvis pretty well. Keep an eye on 25.25 for a buy on some support. That might be a pretty good way to go. Yeah, I'd keep an eye on that. And if you're looking at SoFi long term, again, long term means it's a very subjective thing. For me, let's define what long term is. Long term to me would be going out minimum of 6 months. And no, SoFi would not be, because if you look on the weekly chart, which is what I would look at to define what a long term hold may be, SoFi is a downtrend on the weekly. So that's a big cup of nope there. Yeah. All right. So that's, and I'll show you right here what I'm talking about, my friend, so you can see it. So on the weekly chart of SOFI, and thank you for letting me know it's a long term. No, but by the way, I would stick with what I mentioned before in the daily. That would be a pretty long term, maybe a few months follow through. But on the weekly, no, I can't justify giving it that kind of time horizon beyond, say, a month or two. We're building positions long term in things like financials at the moment, XLF. We did that this week. So those are kinds of the kind of things that I would say find something that's fairly healthy, or at least in the bullish hemisphere on the weekly, and then, give it that 6-month time horizon. All right, gang, thanks as always for being here for Charts and Coffee. I'll see you all on Sunday for Top Tier Outlook at 6 p.m. Eastern. Have a great weekend, gang. Be good to each other.